All attendees are in listen-only mode.
Hello and welcome to this Midweek special webinar. I'm Devarsh and I'm joined by my colleague Vinay, and we'll be speaking about open recommendations and outlook from the technical perspective. So first, let's talk about the open recommendations. So from 1st of May, we have given MTF, E-margin, BSPL, BNPL, 101 recommendations have already been closed. Many of them have been fantastic, and we have been able to generate excellent returns. Last couple of them have done really well. In this week, we have booked about 11 new recommendations, uh, returns anywhere between on average 7-8% kind of returns we have got. Some of the higher returns ones were JK Paper, IRCTC, Deepak Fertilizer, which gave in double-digit returns during this short period of time. Apart from this, from the 1st of May, we have issued and booked profits in 96 fundamental recommendations, and returns anywhere between 15 to 30% kind of returns have been booked. Recently, we have booked returns like 20% in VST, 22% in IDBI Bank, and these are recent new recommendations which we have issued: AstraZeneca, Sterling Tools, and L&T Finance. I'll cover them in detail in some time. New Canara Bank, a new e-margin has been issued this week, and the way PSU banks have resumed the rally, it looks like that it can uh, go back to the first target very soon. Apart from that, we have also issued on 21st of July 18 stock recommendations for DIY SIP. So somebody who wants to build a long-term portfolio via systematic investment plan, they can also have a look at this ideas. So these are the ones which we have issued recently. Apart from that, as I mentioned, three fundamental recommendations were issued. First was AstraZeneca, around 43.59 we have issued with a first target of 48.03 and the ultimate target of 5095. The last few years, AstraZeneca has been fast growing in the areas of oncology, cardiac, and respiratory. And I think this can help us help the company grow about 27% and 45% CAGR over the next 2 years. So AstraZeneca is the first fundamental idea. Second one, which is a well-known NBFC company, L&T Finance. At 131, we have recommended for targets of 143 and 153. At consolidation level, it has adequate capitalization, and it is set up for now. After the business overhaul, it is likely to grow quite fast. And the last third idea which we have issued this week on fundamental side is the Sterling tool at 369 for targets of 409 and 434. We've issued. It is one of the important players in 3V, 3 wheelers in EV space, electrical two-wheeler space, and also they have developed MCU for the light commercial vehicles. So these are the three fundamental ideas which we have issued this week. I hope you have been following them and benefiting out of them. Now I'll hand over the proceeding to my colleague Vinay, who will share his views from the technical charts perspective. Over to you, Vinay.
Yeah, thank you, Devarsh. I hope I am audible.
Yes, yes, you are
So,
audible.
yeah. So, friends, let us start with the Nifty first. So, I'll take you through the technical developments on benchmark indices as well as the small cap and mid caps. I will also go for some ratio analysis, which is giving some good insight about the mid cap, small cap outlook for the next couple of weeks. So, let us start with the Nifty. So here is the chart of Nifty daily chart is there, short term time frame. So it has shown a nice recovery, rounding bottom formation kind of. And today is the day when Nifty is closed. Nifty has closed above 20,000 for the first time. So today Nifty has closed at the all-time high, and this is the first time Nifty has closed above 20,000. So it is a good development. Nifty is closing at all-time high, so it's a good sign. And previous all-time high was 19,991, which was made in July 2023, and that has been taken out decisively. So though we saw some profit booking in yesterday's session, that again we have seen that uptrend resuming on the upside. So Nifty has resumed its uptrend and closed at all-time high, which is a good sign. Now let us look at Nifty on the weekly time frame, which is positional basis. So here we saw the clear-cut breakout. This was a correction which started from 19,991 was the high. From that level, we saw around 700 to 800 points correction towards 19,200. And again, we saw that this breakout came and we have resumed the rally and registered a fresh all-time high. So good thing about this this move is this is a flat kind of pattern, which is a breakout on the Nifty charts. And now here weekly charts will help us to know that what could be the next target for the Nifty. So here, as we have been speaking, that the Nifty has closed on a strong wicket and looking stronger on charts. This is the chart. This is the next target we see for the Nifty. This is nothing but the Fibonacci extension level, considering the entire swing which we started from the March 2023 bottom. Then we went up to 19,991 in July, and then Nifty came down to 19,200 odd level. So if we apply this Fibonacci extension levels to the entire this swing, then the next target, which is the 38.2% Fibonacci extension level, comes in at 20,600. So this is the crucial resistance positional on positional basis. Right now we are at 20,100 odd levels. So 500 points more upside we can see in the Nifty, which is just a 2% away from the current level. As far as support is concerned, we believe that yesterday's low will act as a strong support. So this is a daily chart. Yesterday's low, as we all know, that we saw a significant selling in Nifty small cap and mid cap index in yesterday's session. So Nifty made a low of 19,900 odd levels. So I think for the short-term traders, this would be acting as a strong support. So keeping the stop loss in mind, 19,901 can remain long in the Nifty. And on the upside, the positional target for Nifty comes in at 20,600 odd level. Now let us look at the Bank Nifty chart. So Bank Nifty is yet to register its all-time high. The previous all-time high for the Bank Nifty was at 46,400 odd level, and today's close is 45,900. So what good thing about technical setup of Bank Nifty is that today Bank Nifty has actually surpassed the high which was registered yesterday. So yesterday we saw that from the high in the morning session, the whatever high was made, and after that we saw a significant selling in overall market and in Bank Nifty also. But in today's session, Bank Nifty has actually surpassed yesterday's high, which was around 45,900. So today it closed above 45,900 and decisively. So today Bank Nifty outperformed with the help of PSU Bank Index as well as the Private Bank Index. So looking at this setup, today's setup, it looks like that Bank Nifty is heading towards the new all-time high. The 46,400 was the previous level. So we are expecting that in the coming days, Bank Nifty will surpass this level, and today's close is very convincing. So in the coming days, it might happen that Bank Nifty will outperform the Nifty. Now let us look at Nifty small cap index. So friends, this is the daily chart of Nifty small cap index, and you can see over here, this is a white line which happens to be the 21 days exponential moving average. So this 20 days exponential moving average was acting as a strong support. This was the case on 14th August. We saw that Nifty small cap index touched this line and bounced back nicely. And today also we saw that this 21 days EMA was placed at today's low around 12,300 was the exact level, small cap index, and this was a trend line which adjoins the previous swing high. So both these evidences were suggesting that around today's low there was a strong support, and that is why we saw that small cap index bounced back from the low and it closed with a gain of 1%. So no doubt there is a good recovery in small cap, but yesterday's candle is quite bearish. Actually, this is called a bearish engulfing pattern on the daily chart, which is a signal of short-term trend reversal on the downside. So this candle is still intact. It has not been taken out. This high is not been taken out and it is not negated. So what we believe is, no doubt today's recovery is there and we could see some recovery in the coming session, but unless we see a decisive close above yesterday high, there could be uncertainty in the coming times in the small cap segment. So what we would suggest that on the higher level, looking at this chart, it looks like at higher level one should reduce the exposure in small cap index. And there are other evidences also which are suggesting us that we should reduce the exposure at higher level in small cap and mid cap. And this is one of the important indicator, bearish engulfing on the daily chart. So yesterday's pattern is quite bearish. We have not retraced even 50% of that move. So we might see some recovery, extension of the recovery, but frankly speaking, we don't expect in a short term that it will take out the previous day's high, the yesterday's high. So at higher levels, we would again take a cautious approach in small cap index. Now let us look at Nifty mid cap index. Nifty mid cap index has also acted taken the support at 20 days, 21 days EMA and bounced back. So this is also having a negative pattern. Yesterday's pattern in mid cap index is also a very negative bearish engulfing pattern, which is a negative pattern. So up to some extent we can see some extension of the recovery, but at the higher level again mid caps can see some supply coming in. So we have to take cautious approach after some recovery in mid cap also. So small caps and mid caps both are no doubt have recovered from the lower levels, but at higher levels after 1 or 2% recovery, we may again turn cautious in this particular stocks, and it would be better for traders to shift their focus from mid cap, small cap to the large cap stocks. So we are basically bullish on the large cap stocks as of now, looking at the ratio analysis and looking at the chart of Nifty and Bank Nifty. So basically many large cap stocks are giving good breakouts on the charts right now, so opportunity is there to grab in. So derivative stocks, NSE top 100 stocks can outperform the mid cap, small cap stocks in the coming times, at least for the short term. So at higher levels we are advising people to reduce their exposure in mid cap and small cap. There is one more analysis I would like to show you. This is nothing but the ratio chart. Now you can see on the screen that this is not a normal chart. This is a ratio chart of Nifty against the mid cap index. So if we divide Nifty with the Nifty mid cap index, then this chart comes into the picture. So here it is shows that Nifty has underperformed significantly till now. From the March bottom, Nifty has registered around 19-20% rise, while if you were to look at the small cap and mid cap, they have risen more than 40%. So underperformance of Nifty was there, and it has reached to the underperformance has reached to the extreme oversold zone. So what does this indicate is Nifty has underperformed till now, but now it has reached to the oversold zone against the mid cap index, and now we can expect Nifty to outperform and mid cap, small caps to underperform, looking at this analysis. So this is another kind of evidence which is giving us the confidence that at higher levels one should reduce the exposure in small cap and mid caps, and one should stick to the large caps as of now, looking at the large cap indices and benchmark indices. So I would like to conclude that Nifty is looking strong. The support for Nifty is seen in the range of 19,850 to 19,900. On the upside, positional target, first target which we see is around 20,600, which happens to be the Fibonacci extension levels. And Bank Nifty is expected to outperform from here. 46,400 is the all-time high, previous all-time high. We are expecting that Bank Nifty will cross that level soon. So overall, we believe that Bank Nifty will outperform in the short term, and large cap will outperform the mid cap and small cap. So that is what I wanted to share. Yeah, so one thing I missed, that the sectors. So last time when I came for webinar, we discussed about the PSU bank index. We gave a bullish view on PSU banks at that time, and today we saw that that it outperformed significantly, and many of the PSU bank stocks did very well. So today's close of PSU banks is strong, and we have a couple of recommendations open in the PSU bank segment. So utilize those recommendations and our view which we have been giving in the webinar. And still from here also we believe that PSU banks will do well and outperform other sectors. The other sector which we like is the pharma sector. So pharma is also throwing some good opportunities, and after some running correction it has resumed the uptrend. So pharma and PSU bank index and sectors are looking good for the short term. So try to grab the opportunity in these particular areas. So this is what I wanted to share. Now over to you, Devarsh bhai.
Okay, thank you, Vinay. So now we have some time left, about 3-4 minutes, where we will like to address any questions you may have. So depending upon the instrument you are using, there will be a question mark on the screen. Press that question mark and put in your question. We'll try to answer as many as possible. One question is from Mr. Tanmay Patel, the Nifty Metal Index outlook. Vinay, how is Nifty Metal looking on charts right now?
Yeah, 1 minute. Huh? Yeah, so in metal index, we saw significant selling coming in yesterday's session. So bearish engulfing candlestick pattern there on in yesterday's session. So it is a bearish reversal pattern, and today we have seen some recovery from the lower level, but still the close is not that much convincing. At higher level, we may see supply coming in. So looking at the yesterday's selling in metal index, I would suggest that one should not go for the metal long in the metal index. At higher levels, it will find supply coming in. So yesterday's pattern is quite negative, and in the short term, I think one should stick to the stock sectors which are outperforming, and metal index is likely to underperform for the short term.
And the way Chinese economy is panning out, it looks like that the extra demand which China was generating, which will have some issues. So it is better to remain cautious on the metal index. Next question is on the IT index from Dinesh Goda. Can you please share your view from charts on IT index, Vinay?
Index is trading around its 52-week high and has been outperforming. Many stocks are actually giving breakouts, like we saw that TCS has given good move, Infosys, HCL Tech Mahindra. So all those stocks are looking stronger on the charts, and this is the one sector which we also like for the short term. So apart from the PSU Bank, Pharma, IT is the another sector which is looking on strong on the chart, and we are expecting it to. And the way dollar index is placed at the higher level, I think IT can continue to outperform from here as well. So overall pattern of the IT index is quite strong, but we would like to stick to the large cap stocks, because overall large cap IT stocks are looking better as of now. There is a engulfing pattern on the mid cap small cap indices, so better to stick with the large cap IT stocks like TCS, Infosys, HCL Tech, and we have issued some recommendation out of those. So continue to be there in IT index, but in the large cap stocks only.
Okay. So one more question is there from Mr. Paras Negi. So Paras Negi, pardon my pronunciation, Mr. Negi. So the outlook on chemical sector is the question he's asking. Chemical has gone through a deep correction. There was a dumping from Europe and China, and that created a lot of problem for the sector. Margins were under pressure. Now it is starting to bottom out. For next 3 months, we expect chemical stocks to start bottoming out and start performing. So for a longer term investors, we have bullish view on it. For a shorter term, these stocks are going through bottom formation. So you have to be very stock specific, and short term there could be some whipsaws, some volatility. Over a longer term, it can work very well. Given the cautious outlook on small cap and mid cap, Mr. Prabhakar is asking what is the approach of your recommended stocks. So we have reduced the number of stocks recommended, and we would like you to keep certain amount of dry powder. So keep some cash in the portfolio, and we are going to be careful in issuing. So we have been issuing larger mid caps and large cap stocks now rather than mid cap stocks, because we were a little cautious on the market, and we have reduced the number of recommendations. Number of MTFs open are drastically reduced every day. So that is the approach we are taking. We are reducing the risk to the market. We are increasing the quality of the recommendation. We are trying to increase the recommendation towards the large cap, and we will be little careful going forward as well. So that's bring us to the end of this webinar. Thank you, Vinay, for joining, and let's hope that the people are benefited from the views which we have shared. Thank you, and we can close this webinar.